Hello, everyone. I'm Jean-Claude BeyondMystic, and welcome to today's special metals report. With me are the two very distinguished gentlemen, Mr. Bill Holter and Andy Schechtman. You can find Bill and his work at jsmindset.com, and Andy, of course, at milesfranklin.com. Bill, Andy, welcome back to the show.
Good to see you guys.
Thanks for having us, Jean-Claude.
I'm excited to have you on, Bill, and I wanted to share this with the audience members as well. You just did this interview a couple of days ago with Greg Hunter at USA Watchdog, and you talked about this. Yes, the world is in this banana republic. We'll touch upon that in a second here, but I really wanted you to expound on this huge order that is displacing here the silver market in North America. Set the stage for the audience members here, Bill. What just happened in the silver market?
About a month ago, roughly a month ago, I got a $50 million order. The plan was to go 70% silver, 30% gold, and the client wanted all U.S. coin. Being an American and in the States, U.S. mint lineage coin is, in my opinion, the best coin that anyone can purchase. Mm-hmm. So I spoke with the client on a Friday, got wire instructions out, and they tried to wire on Monday. They were told can't do it at the branch, even though everything was signed. Went to the main branch. I was called on Tuesday. The money should be there today. The money didn't show up, and actually, their back office contacted Miles Franklin. They even contacted me to verify the wire instructions, and they asked me if Miles Franklin was able to handle an order that large. And I said, yes, of course, and then some. And the reason I said and then some was because of, 4 or 5 years back, I tried to bid on one of Sprott's offerings. And back then, I knew that the limit that we could go was 300 million. And I've since found out the limit now is 500 million. Mm-hmm. So the money didn't come Tuesday. The client actually called directly to the bank president and who had been missing for the last 2 days. And just left a message. If the money's not wired by noontime, I'm going to call bank regulators. The money came at roughly 12 o'clock. And back to the order itself, as I mentioned, the plan was to go 70-30 silver to gold. But at the end of the first day, Andy, and kudos to Andy because he got everything done. And it went way smoother than I imagined it could have. So kudos to you, Andy. So the end of the first day, there was 23 million in silver, in eagles, junk, half dollars, and dollars. And then we switched over to gold, which the client wanted pre-1933 gold, and Andy started working on that. The following day, he did find another 4 million. So there's a total of 27 million in silver and 23 million in gold. Now, just to give you a little background, the client was nervous going into the 3-day 4th of July holiday and wanted the money out of the banking system before the holiday and wanted everything done by Friday. So getting the money on Wednesday, we got all the orders done in 36 hours, and all of the wholesalers were paid. So it was the metal was actually the client's metal by Friday. The money was out of the system, and all the wholesalers paid. Now, the thing here is I can't imagine that only $27 million, that's all that was available. And Andy, you can talk about this. We discussed prior to we discussed with the client, how did we want to get this done? Did we want to do this over 2, 3, 4 weeks and try to do it quietly, or just blitz the market, call wholesalers, ask, what do you have? And whatever they listed that they have, Andy would say, we'll take it all. And that was the decision made to get it done, because the client wanted to be done wanted the metal owned. Most importantly, money out of the banking system, but wanted the metal owned before the 4th of July holiday. And I think it worked best because, and Andy, you can talk about this, by the end of the day, Wednesday, and that was just the first day, the dealers were scratching their heads saying, what the heck just happened?
Yeah. So thank you, Bill. Yeah, Andy, put that into perspective here. We talked about $22 million worth here of silver. What is that in terms of coins, and how many of these brokers did you have to go through to fill all of that demand? Put that in perspective for the audience.
It's, almost 800,000 by the first day. And there are other dealers or representatives of the U.S. Mint that I could have gone to, but in this industry, trust is everything. And there are those that I trust explicitly. And I chose to go that direction. And so basically what we did was we cleaned out everything that was available that was either current year issue or backdate issue. And then we actually took allocations that into August for it. I spent 20 hours nonstop over 2 days doing it, and it was a gas. It was a lot of fun. But it really, to me, showed just how small this market really, truly is. What Bill isn't mentioning is that if the client had said, well, I'll take anything you have, it would have wiped out my entire inventory. And so fortunately, the client wanted American coins, which we're one of 27 U.S. Mint authorized resellers, and we've been doing this for 3 decades. So I know the people to go to. I have a relationship with the Mint, and we had quite a few Eagles in stock, almost 90,000. But Bill's right. I was shocked actually at the ability to get this done in 2 days to the client's satisfaction. But if you were to see multiple orders like this happen at once throughout the whole ecosystem, if all of a sudden, you got 10 multimillionaires that say, I want 50 million in gold throughout the, half a dozen dealers or 10 dealers. I mean, in one day, everything in the entire country would be completely obliterated. It's a very thin market, and the timing was great for the client. The timing was fantastic. Not always going to be that easy to do it, but the people that I work with are the best in the business, and they came through. And everything, to Bill's point, other than the August allocations, have been already delivered. Everyone's been paid, and
can you speak to that, guys? I'll start with you, Andy. You're on the screen, but this August allocation, does that mean that you've bought forward here the supply from the other dealers, from the Mint?
So
what does that mean for next month for people who are trying to get some silver here?
That means the U.S. Mint promises to deliver to certain dealers, X amount of coins. And we said, we'll take them. And so as soon as they come in the next 10 days, we've already purchased them. And so it just simply means that they forward sold the promise from the United States Mint, which is something that is very common in this industry. You have to do it in order to keep things going, because no one keeps that large of an inventory. If I have a $50 million inventory, you can blow through that over a period of 10 days, 2 weeks, whatever it may be. You have to continue to cycle it in. And so we're always upfront about it. And I said to Bill, I can get more of these, but I'm not going to have received them until the August allocation. He said, okay, that's okay. Mm-hmm. And so, it certainly makes it more difficult for people to buy silver eagles. I'll tell you this, that the premiums have gone up industry-wide right now. If someone were doing a swap with us, and I don't know if this order had directly related to it. I assume it does. But if I were going to do a trade with someone, and I say a trade because we won't make any money, let's say someone never bought the eagles from us, just comes to us, wants to sell us eagles, but asked to do a trade. I'd like to trade you Silver Eagles because of the high premium for kilo bars. Right now, I'll pay them $10.75 over the price of silver. Premiums are high. And there's a larger spread than normal between buy and sell because, let's just say this particular client said, okay, I'll sell you 100,000. I need to sell you back 100,000 Silver Eagles at 10.75. That's $1,750,000. Is that right? Or $1,075,000 of premium that is not hedgeable. And so we are entering a period of kind of a space that I'm not very familiar with seeing in 3 decades, where premiums continue to rise. And it's not just in the Silver Eagles. It's in the Gold Eagles too. The U.S. Mint told us that they are curtailing production by 50% of all Gold Eagles into the second half of the year. Now, the interesting part about this is that for the past 2 years, 95% of what this industry is selling is silver, not gold. And they're making it hard to get gold now all of a sudden too. So to your point, if someone wanted to buy a whole bunch of Gold Eagles and I sold everything I could find, the next step would be to go to primary distributors who are promised allocations in August and say, I'll take it. And the one question everyone asked me along the way was, do you have the money? Which was the funny part. They trust me. They know me, but they all wanted to know, when are we going to get paid? And so, this is a situation where it's very much kind of a, what's the word I'm looking for? It's a on time, or it's, you sell things forward, but it's typically, it all matters upon what your inventory is. And when you sell out of your inventory, you hope that the U.S. Mint delivers when they're supposed to. You hope the Canadian Mint delivers when they're supposed to. And this really speaks to the fragility of the industry. And I've said for a long time, it will be a market marked by the inability to source product ultimately. Because if you see more orders like this, it will just wipe out the entire industry. If you see more wealthy people entering this space, it just will wipe out the supply.
Let's get into that. Bill, you had mentioned in this interview with Greg Hunter that your client was looking to do perhaps 2 or 3 more of these orders. I have Jay Wilson on the screen here. He's saying, okay, so if I want to place a $50 million, who do I call? Well, you call Bill HOLTER there and he'll set you up. But here's the thing. It's not just a joke. There's 614 as of 2020 billionaires in North America. This number has gone up since then with all the money printing. What's the likelihood here of more of these orders coming in and completely wiping out the market, as Andy is just talking about now, Bill?
As of right now, we've had discussions. That's all I can say is I've talked with the client about future orders. We don't have any orders in hand, but just understand that $27 million cleaned out the U.S. coin market. Who knows how much it would take to clean out the foreign sovereigns. And then after you get past foreign sovereigns, now you're getting into the poorer forms of ownership, the generics and the bars. And I think wealthy people understand that they're going to be forced to purchase the poorer form of ownership, i.e. bars, because there's just not enough coin out there. And the idea here was buy the best. And that's what we did.
Fascinating.
So, and one other thing, Jean-Claude.
Yeah, go ahead.
This has really put a crimp in. There are going to be obviously future deliveries of Eagles because they are producing them. But as far as the junk market is concerned, and Andy can attest to this, I've bought junk silver now for customers probably for 6 or 7 years, and that has been my number one recommendation. And this really hit the junk market to the point I got a fairly decent size order yesterday and could only get I could only get 12 and a half bags. You're talking a small amount, and it wasn't even a third of the order. Mm-hmm. So the junk market has been cleaned out. And in my opinion, and I think I've said this on your show, and I know I've said it before, I like junk silver because it's U.S. Mint lineage, and it is the smallest denomination. $1.38 equals 1 ounce. So call that 14 dimes. That gives you 14 transactions versus one with either a silver eagle or a silver bar or silver round or what have you. And what I'm talking about is, and I could say if, but the real word is when the system breaks down, dimes and quarters are going to be the best form of ownership because they're the smallest denominations.
Mm-hmm. Very good. Andy, let's talk about that for you as well. What do you see coming up for you in terms of sourcing here, the junk silver? Some people are asking here what that was. Andy just answered the question. And also, let's talk about the Canadian market also for the silver maples and the Canadian junk silver. I was talking to the folks there at mfbullion.ca earlier today, and they were also saying that junk silver is almost impossible to find here now in Canada. Andy, let's talk about that inventory.
It's emblematic of the statement, there's no bull market like a metals bull market. And even if the price isn't really acting the way we think it is, I think people are afraid to leave their money in the banking system, to leave their money in dollars. And so people who hold junk silver really don't sell it. There's no reason to. You know, it has the name junk, and Bill really hit it on the head with telling all of his clients over the years to buy junk silver, because most of my career, the reason it was called junk was because it carried no premium. In fact, way back when, I used to buy it for back of melt and sell it for 10 or 20 cents over melt. And so it was junk, meaning it had no value in and above the melt value. In this case, it's the second highest premium item we sell behind Silver Eagles. And you have to continue to raise the premiums just to try to find the stuff. It hasn't been made since 1964. And so you're talking almost 60 years where this has just been floating around. And it's getting to the point where it's becoming unobtainium. It's becoming impossible to find because it can't be reproduced. And to Bill's point, it offers the greatest utility and diversity in a situation where people may have to ultimately trade. The term bag that Bill used denotes $1,000 face value. So a bag would be 10,000 dimes or 4,000 quarters or 2,000 half dollars, and contains between 715 and 723 ounces of silver. And the reason I say between, even though industry uses 715, if they were an uncirculated bag, had fresh from the mint, never been circulated, there'd be 723 ounces. The industry uses 715 with the theory that through the years of being run through coin counters and whatnot, that a little bit of the silver wears off. But what used to be junk, what used to be the easiest thing for us to get, what used to be the most conservative way to own it, is now pretty darn close to the most difficult thing to obtain and the highest premiums to obtain. And I got to give you credit, Bill. You hit that one on the head. You're talking premiums that are roughly $8 or $9 higher per ounce than I've ever seen in my career. So it is emblematic of how difficult things ultimately will be getting product. I think you can look to junk silver as a glimpse of what that will be like. As far as Canadian junk silver is even harder for us to get. You really never see any down here per se. And talking to my friends up in Canada, they have a very difficult time getting it. It's just very difficult to find these items that haven't been made for almost 60 years in silver. In buying older gold coins, you'll find them, but certainly not the silver right now. It's as difficult to get as anything that we sell.
I remember 10 years ago, I was part of this group, a bunch of guys had gotten together, and we were chasing all of the estate sales to buy silver. And at the time, like you were saying, we could buy the junk silver at less than spot because most of the coin dealers didn't want them. They had to pay to ship them, to go melt them and all that stuff, and they would sell it for spot or just under spot. Now, if you find them, it's a huge premium right now, of course. But I talked to the guys again here this morning. We do have the silver maples available for you guys. If you're on the Canadian side of the equation, just go to mfbullion.ca. The links are in the description box below. And Andy, let's talk about the inventory on the US side. Right now, we have the 1 ounce silver Krugerrands on sale at $4.95 over spot. Actually, I think Did we change that, Andy? Hold
yeah,
on.
we have right now. We have the 2022 Britannia and the 2022 Philharmonic at 450 over spot. And honestly, those are as good a premiums as I've seen in almost 2 years on a sovereign issue coin. So 450 over spot on both Britannias and Philharmonics 2022s. They are live and available to be delivered.
So guys, if you use the form beyondmystic.net/silver and you fill that out, Andy will honor that price. And after the show here, I'll just go and update. Yeah.
To put that in context with the American Eagles, most dealers in the country are $15 over spot on American Eagles. We might be a little bit less than that right now.
Yeah.
We are a little bit less, but the point of it is that is the difference where you're paying a $10 to $11 difference for an Eagle over the Britannia or the Philharmonic that used to be 50 to 75 cents, not 10 or $11. The fact that you can buy a Britannia or a Philharmonic for $5 less than junk silver, roughly $4 less per ounce. I've never seen that ever in 30 years of business, ever, where people could ultimately be enticed perhaps to trade junk silver, make a big premium and trade it into other coins. That's why you have to keep raising the premium or no one will sell it. And this is a very unusual time. And this comes with very little interest by the mainstream. You know?
Still.
And so if you realize that less than 1% of the population owns any metal, or looking at it another way, if you look at the entire portfolio across the whole North American gambit, less than 1% is in precious metals. What if that number goes to 5 and you see over a 5-fold increase in demand? Then everything will become like junk silver. Getting product will be next to impossible. And when I look at this client who's sophisticated and places an order, it reminds me that very often the people with the large money people are a little bit more in tune and typically ahead of the crowd, and they position themselves ahead of the crowd. So if this is any glimpse of that, my expectations are that, you'll see more people waking up to the benefits of buying metals, especially when all asset classes are so overvalued. And you look at silver still trading well below half of its all-time high when everything else is well above its all-time high. This is an asset class that I, for one, am shocked hasn't garnished more attention than it has from big money.
You just mentioned there's a lot of weird things going on. Of course, Bill, when you were on the show last month, you talked about the fact that the Fed was, in fact, pulling the plug. We've just seen now in the last couple of days another 75 basis point increase to the Fed rate. Now, I asked Andy yesterday in a private conversation, because as soon as this was announced, silver went from 1820 or 1830 to just above or just under $20, and we're sitting above $20 spot price here today. And I asked him, is this going to hold? Are they going to be able to crash it down? What's happening behind the scenes here after this latest Fed fund rates, and why is silver reacting to it? Let me start with Andy, and then I'll go to you, Bill. Go ahead, Andy.
Well, I asked you to pull up a chart before we jumped on this, and I think it's worth mentioning, and maybe you can show that chart. Okay. So this chart right here shows the positioning of commercial banks and their derivative position going back 10 years, right? And you can see that's the first quarter of 2022 right there. And you can see just how much they put into suppressing the price Q1 2022. But I believe there is a reason behind it. And, I got this information. I'll give credit where credit is due to Ted Butler, but I really thought about it hard. And I agree with it. I guess we'll have to see if it plays out. Without getting too deep, let me explain what Ted is saying. If you go back and look over all the years that I've been watching the COMEX, it's the commercial banks that cap the price. And what makes what the commercial banks do so unusual, and I want you to think of GameStop and AMC. With GameStop and AMC, you had the public shorting a stock, and the stock was falling, and they kept shorting it and shorting it. You short a falling market, and you'll drive the price further down, and that's really the idea. A market that is rising, to short a rising market is very dangerous. You have to have very deep pockets to overwhelm the long positions. As it's going higher, you have to keep selling into a rising market. You can get crushed. You can go bankrupt. And like in trading places, when Mortimer Duke is yelling, sell Mortimer, or the other guy, sell Mortimer, sell, because they were getting crushed on a short position. So what the commercial banks do is they typically suck in the speculators, the hedge funds. They let the price rise, and then they continue to short it, and they overwhelm the long positions who capitulate and sell. And this is a rinse, wash, and repeat process that we see over and over and over again. And oftentimes I wonder to myself, when are the hedge funds going to wake up? And when are they going to realize that this is a loop that continues to happen, where they suck, the hedge funds are always long. And then when the commercial banks short the price so much, they give up and they sell, and they do the same dance all over again. So what Ted Butler is basically saying is that market, that orange bar right there, is quarter one 2022. And he is basically saying this coincides with the nickel market failure in the London Metals Exchange. And I think this is a really important point for people to grasp. There's a little bit of optimism here for people who are wondering why the price isn't behaving in an environment with 40-year high inflation and war and political issues and geopolitical issues. It should be doing better. Well, okay. On March 8th, 2022, we had the high point for gold ever. It was the all-time high in gold, and it coincided directly with the nickel market failure. For those people who don't remember, the nickel market failed. There was a very wealthy Chinese billionaire who had a very large bet against nickel. And when the price started to skyrocket, it would have bankrupted him. And in the 140 years of the exchange, they've never rendered a trade void and just canceled everything. And it is in fact the duty of the members of the exchange, if a trader and his broker cannot make good on a trade, that they have to come in and make the exchange whole and backstop it to give it credibility. And so what they did in essence is bail out the Chinese billionaire and render all those trades void, cost people millions and millions of dollars. And I think ruined
and covered their own asses.
Sorry?
Covered their own asses.
Their own asses.
Yes.
What they did.
Right. It ruined the credibility of a 140-year-old exchange, and as Bill said, covered their own asses. So what Ted is saying is that this is a wake-up call, because the short position in gold and silver dwarfs that of nickel, many times bigger. And so what he says is, if you watch what happens to that day, literally to that day, the price started to cascade. And if you look at the amount of short positions that you're seeing right there, that they put on that orange bar, how much in comparison to the last 12 years, the vengeance that they pushed that ball down the hill so hard and so fast that the managed money said, oh my gosh, you got 40-year high inflation, you got chaos everywhere, there's wars going on, there's geopolitical strife, the country is divided, and yet it goes down like this. Are you kidding me? Mm-hmm. What he is saying is that it was a bear trap. That what the commercial banks have done is they pushed it so far down that the hedge funds said, screw it, and gave up. And the hedge funds started not only selling all of their long positions, and when they sell their long position, guess who takes that long trade? Commercial banks. But not only that, they went short massively. So they go short, the commercial bank takes the long side. It's a zero-sum game. One goes long, the other goes short. In essence, what he has said is that right now in the history of the commodity exchange, the history of it, the commercial banks have the smallest short position they have ever had in the history of the COMEX market. And in fact, when measured against their long position, they are actually net long for the first time I can ever remember. Now, I just want to give you two examples of when they did something similar to this, and then I'll turn it over to you and Bill. In 2008 and in 2020, we saw something similar to this. In 2008, they drove the price down from 21 to 9, and they sold off a bunch of their short positions along the way. In other words, they enticed the managed money into going short, but their short position was nowhere near as small as it is right now. Same thing in 2020. They push the ball down the hill, the managed money goes short, drives the price down. The short position of the commercial banks was still much bigger than it is today. Now, I'll use both of those examples to give you an idea of what happened subsequently. In 2008, over the next 3 years, silver went up almost sixfold from that position. In 2020, they drove the price down to $11. It went up almost threefold in 6 months. when you look at it right now, this is the smallest short position they have ever had in the history of the COMEX market. And where the rubber meets the road is simply this. As the price rises, as I believe ultimately it will, do they come in and continue to short the rising market as they have always done? Or is this truly, is that market failure? Was that truly the wake-up call? At the exact same time, 3 traders right now, including Michael Nowak, who was the head of the JP Morgan trading desk for metals, are facing RICO charges. Right now, they're on trial. Was this the culmination of all of this stuff basically saying, we made a lot of money doing this, but if we keep screwing around and playing with fire, we're going to get burned and blow up the entire game, including the exchanges, including the commercial banks, just like Bear Stearns, who went bankrupt when silver went to 21 bucks an ounce. So if Ted is right, and this is the ultimate bear trap ever set, what will happen is as the price rises, maybe they'll even continue to add to their longs. They won't cap the rally. And these hedge funds don't have pain tolerance. They're going to start to cover, which will jack the price up to the moon like that. And so we'll see. But there's reason to be optimistic, Jean-Claude. And to your point, yeah, we may see it fall a little bit, maybe. But I think the backdrop for rising prices has never been as bullish as it is right now. I'd love to get Bill's take on that because he sees the macro picture in this too.
Right. Let's get back into that, Bill, this idea of this rate hike, the fact you were on the show last month, talked about pulling the plug. The reset is clearly underway now. A lot of people were asking in the chat yesterday on my other show saying, hey, it's at 20 bucks today. It was at 18. I don't want to buy it at 20 right now. I'm a little bit shy. I don't want to pay the premiums. And there's somebody in the chat here saying, who cares about premiums? Silver is going to perhaps 600 or 5,000 or perhaps parity with gold. If you look at the Bill Sinclair and what Cliff High is also saying, who cares about premiums? Get your hands on silver while you can. Bill, do you think this little rally here in the last couple of days is going to stand? Are we, as Andy is saying here, entering the fundamentals to show that most of this smart money is going net long? What's going on, Bill?
Well, in my opinion, the bottom's in. That doesn't mean you can't see $15 silver or 10 or 5. Let me just mention, years and years ago, my partner Jim had said that when all is said and done, when this whole thing plays out, the ones that were short and the ones that were suppressing the price would be the ones who flipped long and made the most money on the rise. So that's the first thing. Another thing is when you're looking at $18 silver or $20 silver, it's fraudulent. It's fake. Can you purchase silver anywhere in the world for $20? Anywhere, in any form, the crappiest form, bars, whatever. No, you can't, because there's a dichotomy. That is a paper market. Those contracts that are being sold to suppress the price are not backed by silver. On COMEX, if you had a bunch of longs in gold or in silver, demand delivery, it would be all over. They cannot deliver it. So it's conceivable, and this is also something Jim had talked about, is it is conceivable that you see gold, paper gold, COMEX, go to $10 an ounce offered, no bid. And for physical metal, you could have like $1 million an ounce bid, but no offers. So what he's getting at is you're going to see jaws open. If this game keeps going on, you're going to see the jaws between paper and physical gold spread further and further apart. Now, I don't think it can last very long because the credibility of the paper markets will be gone. And it's important to understand the why of all of this. If we had $5,000 or $10,000 gold right now, you wouldn't see 3% interest rates in the United States. You'd see 7%, 9%, maybe double digits, because gold is the thermometer. So what they've done is they've tried to break the thermometer to allow the Fed to continue to print and the Treasury to continue to borrow. Now, there's no way you could have $200, $300, $500, $1,000 silver and $1,700 gold. once silver takes off, gold will follow. It always happens. Silver always leads to the upside and always leads to the downside. So silver is basically the fuse, if you want, and they can't let the fuse get lit, because that would then lead to gold moving higher, and that would lead to a nuclear implosion of all the debt that's outstanding. Now, you mentioned the rate hike on Wednesday. We had rate hike a month before. They can, in my opinion, this is a planned implosion, because you're now looking at a world that has over $350 trillion in debt on top of a $100 trillion economy, or a real economy. If you go back 20, 30 years, anytime any country got to 100% of GDP, 100% debt to GDP, they were considered entering into Banana Republic land. Now it's the entire world. Now the entire world owes over 350 trillion in debt, not to mention at least well over a quadrillion, but probably 2 quadrillion, because they haven't done calculations in about 8 or 10 years of derivatives. And derivatives are basically just bets where the seller offers some type of insurance. You pay the premium. That premium goes to their bottom line, and those contracts will never, ever, ever perform. And then you ask yourself this question: what's the value of a contract that cannot perform? And the answer is 0.
Right.
So, in my opinion, this is a planned implosion, because no one in their right mind. First off, we would never have gotten to this point debt-wise. But if you go back and just read the book, The Creature from Jekyll Isle, that's the plan. That was the plan in 1913, was to get the United States, thus the world, capitalism, get it so indebted and then pull the rug out from under it. And the way to pull the rug out from under it is raise rates. Because now if you own an asset and you want to sell it, for instance, a house or a commercial property or whatever, interest rates are they've pulled back a little bit, but they're still roughly double where they were at the beginning of the year. So the amount of buying power has been cut close to in half since the beginning of the year if you're looking to sell something. So when the asset drops in price, the debt still remains. So it's my opinion that this whole thing is planned, and you're just watching it in real time. And I thought it was interesting today. Now the WEF is saying there shouldn't be private car ownership.
Yeah.
So you're not gonna, you won't own a car. You're gonna eat bugs, and you're gonna be happy.
Right. So no more sports car for you, Mr. Bill.
Yeah.
Right.
Yeah, I got news for you. My Supra ain't going nowhere.
I love it. Okay, you just talked about, I want to bring back to something you just said here, the credibility of the paper markets. Bill and you and Andy had talked about on our previous shows here what happened to the LME with the nickel market. It showed the fallacy of it all, the fakeness of it all, the house of cards that it was. Here in Canada, at about the same time, we saw our government seize bank accounts of people who had donated to a specific cause. We don't need to get into that. But further to that, after they had done that first step of seizing the bank accounts of people who had donated to a specific cause, they went out and freezed other bank accounts in order to prevent a bank run, which was happening at the time. We saw all of these capital outflows of people no longer trusting the system. So going back to Mr. Sinclair here, on JS Mindset, you guys have this a gold premium package there where you have these weekly calls for the audience members. And for the longest time, Bill, you and Andy have been talking about getting out of the system. This is exactly what your client was trying to achieve here last week. And that was just one person with some deep pockets. Let's talk about the audience members here. A lot of people are saying, well, JC, I don't have $50 million to buy silver. No, but at the same time, you need to take actions here, as Bill is saying, they've already pulled the plug, and so they're imploding this. And then now it's a question of the steps that you need to take as a guy on the street here to try to navigate this as best you can to move your wealth from the old system into the new one. What would you say there, Bill, to the folks who don't have the advantage yet of watching you on jsmindset.com? What would be your advice to them?
Well, first off, nobody's going to take care of you other than yourself. If you think the government's going to take care of you, then there's no hope. And I do want to mention, by the way, JC, there are bank runs going on right now, serious bank runs in China. And there's also boycotts on paying mortgages. And the government response to this point, it looks like, is to turn people's QR codes red so they can't leave the house. But as far as get out of the system, people ask me, how much should I put into gold or silver? And my standard answer has been now for 3 or 4 years, whatever you don't want to lose. So no, you don't have 50 million. You might not have $1 million. You might not have 100,000. You might only have $5,000 or $10,000 to your name. But do you want to lose that in a bank, or would you rather have that in hand in something that cannot go bankrupt tomorrow morning and is usable from a spending standpoint?
Yeah, exactly. Andy, do you want to take a step at that as well? Get out of the system here. What's happening? You just mentioned China there, the bank runs, but it's not just the bank runs. It's all of this protest that's happening around the world. The people are protesting, just as Bill was saying here. You can't own cars, you can't have fertilizer, you can't have food, you're going to eat all of these crickets. The farmers are taking up arms, and we're seeing that not just in the Netherlands now, and also in Germany. We're seeing that in Spain and Italy as well. Sri Lanka, poor guy had to evacuate the palace there with his suitcase of money to get onto this Navy boat just a week ago or a week and a half ago. What's going on, Andy, in your view, and how much time do we have? I think this is the main question for the audience members here. They're looking at Cliff High's predictions. Cliff says we're 2 weeks away maybe from these bank runs here in North America, and at the worst, maybe 3 months away. But we're closer there than people actually think. What's your gut telling you here, just judging by the news items that are, of course, not on the 6 o'clock news, but also the tightness of the silver and gold market? Andy?
So there are two news items to me that are, I look at this from a very large macro perspective, and there are two news items to me that mean the world, at least in terms of the way things are going to shape out. To me, that mean everything. And that is, I ask people all the time, JC, what makes the dollar the world reserve currency? And it's kind of surprising to me that maybe 1 out of 100 people ever get it right. I ask them, what makes dollar world reserve? And some people say the military. Some people says, how in demand the dollar is. Some people say gold. And gold used to be until 1971, when, as Bill likes to say, President de Gaulle proved that convertible currencies convert. And he tried to take back the gold, which was promised to the rest of the world's governments since the end of World War II. You could exchange dollars for $35 an ounce, and he bled almost half the gold held at the Treasury, and Nixon closed the gold window. It was 3 years later that we struck a deal with the Saudi kingdom that we will protect them. Now, I've been on your show talking about this forever. Since September of last year, I've said it 1,000,000 times, and you pulled up the picture every time of how Russia and Saudi Arabia have struck a joint military cooperation agreement. The day after that, they did it with Nigeria. I have been screaming every time I'm on your show, this means something. This means something. This is a big deal. Well, over the last couple, that's the picture you show every time. That's going back to September of 2021. And there's no coincidence that this was announced the day after we left Afghanistan, with allies behind enemy lines and people hanging from the wing of a transport plane. They issued that announcement when we were at our lowest, not the America that Bill and I grew up in. And so in any case, I have been hell-bent on saying that means something. Well, in the last few weeks, 2 announcements have come out that people need to really think about for a moment. And that is simply this. Number one, first, Saudi Arabia says we are contemplating joining BRICS. Now, when a country says contemplating in the media, my take on that is that yes, that means it's done. And if you think Biden, who hasn't even gone to Texas yet to look at the the border problems that we're having here in the States, but flies to Saudi Arabia to ask for more oil when we are going green and ruining their way of life. I got $1 for you to, I'll sell it to you for 10 cents. The point of it is that ain't happening. What he's doing there is going there to beg them not to join the BRICS nations. And number two, you get China and Russia come out just the other day shaking hands and saying, we are now issuing a new world reserve currency. The BRICS nations coalescing and issuing a new world reserve currency. We've talked about the Belt Road Initiative, which is 75% of human population. And now you're adding, that's just China and Africa, right? The CS in BRICS. But now you got put in the BR and the I, and now you're seeing countries like Iran and Venezuela and Saudi Arabia. Turkey just announced that they want to do it. All of these things are happening, sidestepping the dollar. And to me, when we talk about Powell pussyfooting around raising interest rates to 2.25% on the federal funds rate, that ain't getting tough on anything. They haven't sold off their balance sheet. They haven't quantitatively tightened yet. They don't want to blow up the system. And you can see by the inverted yield curve that the market believes they won't, that the market believes they will pivot as soon as things start to get very painful, as the markets start to crumble in the light of rising rates. So my biggest concern of all, and when you ask how fast it can happen, is the fact that what makes the dollar the world reserve currency is the protection of the Saudi kingdom. Since September of last year, that is a privilege that we do not hold alone any longer. We are destroying their way of life by going completely and totally green. And their admission of joining the BRICS nations, and the BRICS nations just said they're making a world reserve currency. Take a step back and think about what that means. If all of a sudden on a Sunday night, which will be Monday morning in Saudi Arabia, you see all of the leaders of Brazil, Russia, China, India, South Africa, Iran, Venezuela, all these countries standing on a podium with their arms around each other saying, we have now issued a new currency. We have coalesced. We're issuing a new currency. This, by the way, would represent over 80% of human population, closer to 85%. And we're going to issue a new currency. And by the way, Saudi Arabia says, hey, thanks for the memories. It's been great. But OPEC is now opening up trades to our members here of the BRICS nations in oil. We're going to open up oil sales in yuan, ruble, rupee, and gold. And we'll throw euro into it. And like that, everything ends in this country, as every country on the planet has had to own dollars for 50 years to buy oil. And so when all those countries start to dump dollars, the Fed doesn't want to be in history books for lighting the fuse and blowing up the American way of life. Instead, they'll find a villain. Just like they're telling us Putin is the cause of inflation, hell, it is not. Inflation is an increase in the money supply and a decrease in productivity. Does that sound like anything that's happened the last 2 years, where everyone's been paid to sit on their couch and play video games, need bonbons, and get paid for it? That's exactly what inflation is. Way more money, less productivity, more money chasing less stuff. And when you look at the probability of Saudi Arabia after they join BRICS, after it's already been, they just announced we're going to issue a competitive world reserve currency. What happens if they open up oil? God forbid they all pledge to this. The digital yuan has done 12 billion in successful trades in the last year and a half. God forbid all of these countries, the RICS in BRICS, Russia, India, China, South Africa, they're the ones who produce and accumulate all the gold. What if they say, we're all going to pledge gold right now to the new distributed ledger technology that the Chinese have perfected, and it's going to be the BRICS nations' central bank digital currency, and we all have just pledged 5 metric or 50 metric tons or 500 metric tons or whatever the number is, and you can all see it right there on the distributed ledger. The whole world can see it. God forbid, but if OPEC says, hey, we're going to issue and open up currency or oil and other currencies, all those countries sell dollars. Those dollars come flying home, creating hyperinflation like that. What happens to interest rates? They go straight to the moon. That's your Klaus Schwab moment. Bill says you'll eat crickets and not drive a car. Well, but that's the thing. The Fed doesn't want to be the one to do that. But if you have a villain, those bastards with the BRICS nations, and they do this, and OPEC says now all currencies can buy oil, and all those dollars come home, and interest rates spike to the moon, right. In the face of rising inflation, everything collapses. Not only the dollars, stocks, bonds, and real estate are inversely correlated. That, to me, is what we need to focus on. It is not the Fed. They're a sideshow. And when could it happen? Don't know. But I believe it will happen. And when it happens, I think it'll happen all at once. I think it'll happen on a Monday morning. And, to Brent Johnson and his milkshake theory, I give it credibility. Look at the dollar right now. It's happening. But Brent talks about that ending, and when it does so in a spectacular fashion. And that's what I think we'll see. No time to prepare. If you haven't realized the severity of where we are right now, if you don't see how fragile the whole ecosystem is, reliant upon OPEC to sell oil in dollars or maybe now go other ways, and what happens if they do. To me, that's the big deal. It's not the Fed and their pivoting and their attempt to normalize their balance sheet and raise rates. They won't do it. They can't do it.
It's a sideshow. It's a big sideshow. The real show is right here. This interview, Andy was on this series as well, The Death of the Petrodollar. We talked about this deal with Saudi Arabia. And of course, now we have the news of China and Russia getting together for a new world reserve currency. Bill, let me ask you, since we did this episode last year, and you've seen all of these new nails being put in the coffin here, there's a lot of analysts who are saying that the petrodollar is in fact already dead. We just haven't had the funeral yet. For most of the mainstream viewing population, they haven't understood that point yet. But a lot of people are pegging that actual funeral perhaps as early as August, September, or October of this year. If you were to bet, Bill, when do you think we're going to actually get to this Federal Reserve note death, but funeral itself here, as Stefan was saying?
You're trying to pin me down on a date. There's no way to do that. All I can tell you is,
I got to try.
Look at the USDX.
Yeah.
If you look at the USDX, I mean, you've got people running around saying, "Oh, look how strong the dollar is." Yeah, the dollar is strong versus the euro, versus the yen, versus the pound, versus the Canadian dollar, versus other fiat currencies. But we know, I mean, just look at a loaf of bread or a dozen eggs or a gallon of gas or whatever. The dollar is extremely weak versus real stuff.
Mm-hmm.
I guess the reasoning behind that is because you have all sorts of trade settlement contracts being closed out and settled where they were in dollars. So there's a scramble for dollars to clean up the past trade and contract transactions. So that's the reason for the strength versus other currencies. But again, you shouldn't measure the dollar by other fiat currencies. You should measure it versus real stuff. Mm-hmm. And the fact that the USDX is spiking, that's going to blow up emerging markets. I mean, there's countries that have borrowed in dollars because it was the lower interest rate. You know, they got 1, 2, 3, even 4% lower rates by borrowing in dollars. But now they're paying another 15, 20, 25% more to actually pay the debt off because the dollar has spiked. So the spike in the dollar is really a bad thing, and I view it as a flame out type of event. So you're asking me, you know, when does that turn and collapse and morph into a shutting down of the United States credit card? Because that's where this goes. This is good. And I've said this all along. Everything runs on credit, and this is all about the lack of full faith and credit of the United States government. We're going to be shut off because the world is clearly saying we want free, real, and fair settlement. We want something for something. The game of us sending you stuff, real stuff, and you sending us fake currency, those days are over. And that's what's going to really mess up the standard of living in not just the US, but the West overall. Because, I mean, in the case of the United States, what do we manufacture? We don't manufacture anything.
Right.
And if foreign countries are saying, yeah, we'll send you these widgets or whatever, but you got to send us something real. You got to send us oil, grain, gold, what have you. We don't want to take dollars because they're not real. Guess what? We're not getting the stuff. and our standard of living is going to absolutely implode.
Very well said.
It's
Now,
very well. Go ahead.
You tried to pin me down. I don't think we get out of this year. We'll put it that way.
And it makes a lot of sense, judging by what we're hearing. And also in the woo world, they're saying that something big here is just around the corner as well. Guys, if you're looking for physical gold or silver, please check out beyondmystic.net/silver. Of course, this part of these booking forms also go to Bill. So he might actually be picking up the phone here if you book an order here today. Bill, before we go, what do you have coming up this weekend with the boys? Is there any specific topics? People who just want to register today here on jsmindset.com, what can they expect for this weekend's call here with the boys?
I think one of the main topics will be just what I mentioned. The full faith and credit of the U.S. government means nothing. And we're going to go at that from several different angles.
Okay, very good. And Andy, before we go here today, let's talk about the new Beyond Mystic silver bar. I believe you've just had the third die made. What's the projection schedule here for that first strike here of the third Beyond Mystic silver bar? What do you got for us, Andy?
I think we'll get them ramping up to speed here as soon as Monday or Tuesday of next week. I would like to be able to start offering them as soon as next week.
Oh, wow.
We did just get the die, and it is, I don't know. I've been in a conference all week down here in Florida. I don't know if we've actually started running it today. I do believe we got the die yesterday or the day before, so we may have already started it. If not, it'll be next week for sure. And we've really refined the process, JC. You know, you started out. You were the guinea pig, really, on the first bar. The first two bars, and we've refined the process, and certainly appreciate the patience getting up to speed and figuring out how to tweak it. We went from people that sell and store precious metals into a company that's actually making its own bars and pretty soon its own coins. But the new third bar should be good to start taking orders, I would assume, as soon as next week.
Awesome. Well, folks, stay tuned for that. As soon as I get this third die set up here in terms of the graphics, also, we'll put up an order form for you guys. Quite a few already emailing me to get their name on the list. So don't worry, you're all going to be in the pre-order form. I'll get that up as soon as I get that first die struck. Thank you so much, Andy. Thank you so much, Bill. You guys are absolutely amazing. And folks, this is a long weekend here in Canada, and as Bill and Andy said, if this is going to happen, it could happen during a long weekend where we wake up the next week and the world is completely different. So if there's still things you can do to prepare, please, whatever those things are, please go ahead and do them while you still can. Thank you so much, everyone, for joining us here today. This was, of course, another edition of the Hi-Ho Silver with Mr. Bill Holter and Andy SCHECTMAN. Please remember to like, share, and subscribe, and we'll see you soon. Au revoir.